Okay, so there are when it comes to trading, as I said, we like to overcomplicate things. You get all we are trying to do on the charts, all the drawings and lines and graphics we are doing on the charts is just to identify where market is going to next. That's all. So if the market is here, we are trying to know, okay, will it go higher or will it go lower? Will it continue to go higher or will it continue to go lower? Has it stopped going lower? Is it about to go higher? That is basically all we are here to do. Trying to get the next trade direction. But sometimes we overcomplicate it. Now, let's just go back to the basics. We know that price, you will never see price moving like this, right? It's not possible. It's either going up by creating series of higher highs and higher lows, or it's going down by creating series of lower highs and lower lows. You understand? That's all. Just don't complicate this. Just keep it simple. It's either going up, down, or it's creating equal highs and equal lows. This is where you say, okay, market is ranging or consolidating. It's not going anywhere. You get. I don't want you to think about, okay, when market is doing this, is creating liquidity, is trying to deceive dumb money and smart money above liquidity. And no, yes, are all those things true? Yes. Do they help? Yes. Do you need them? Yes. But are they necessary for you to understand what price is actually doing? No, really. You understand? All we need to know is to be able to spot what market is currently doing at the current time. What do I mean? Is market creating series of higher highs and higher lows, or is market creating series of lower highs and lower lows, or is the market ranging? That's all you need to know. That's basically all you need to know. Now, talking about, let's go to time frames. Now, we know that there are several time frames on the charts. We have the we have from months, we have week, we have day, we have hours, down to minutes, even seconds, then ticks. You get. Everybody have their own preference. Some people will tell you, okay, 5 minutes chart is the best. Some people will tell you 6 T. There is no time frame. There is no perfect time frame. There is no time frame that would make you profitable. No time frame is responsible for that. I've seen people making crazy profit on 2 minutes. I've seen people making crazy profit on daily. I've seen people making crazy profit on 4 hours. All it boils down to is your trading model. You get. So if you are a position trader, that is, you hold trades for months, you get, you hold trades for maybe even years, you're a position trader, you can't be going on 15 minutes. If you are a swing trader, you hold trades from days to weeks to maybe even a month or two, you can't be trading on 1 hour, you get, or 5 minutes or 15 minutes. You don't need that. If you're a day trader, you take a position and you close it in one day or at most the next. What are you doing on 1 minute? What are you doing on 5 minutes time frame? You get. You don't need that. You choose time frame based on the kind of trader you are and based on what you are hoping to achieve in this market. So for me, I'm a day trader. I close my trade within a day or at most the next day. That is intraday trading. This is what I mean, intraday. So, who is a intraday trader? An intraday is an individual who buys and sells financial within the same day, within the same trading day, to profit from short-term price fluctuations. All profit are closed or squared off before market closes, meaning no positions are held overnight, which help avoid overnight news and all those things. We all have the reason we do things like that. You understand? Some is just that we are not comfortable holding trades for long. Some is just that we've not gotten to the point where we hold trades for that long. Some is just financial reason. We need quick profits. You understand? Whatever your reason is, that does not mean um you are a day trader now. You can't become a swing trader tomorrow. As a trader, you evolve, you grow, your preference change. The more you're exposed to the market, the more you know, the more your approach to the market changes. You understand? So that swing trader are the best, position traders are magicians, and day traders are geniuses. Is a dumb beginner argument. You don't need all those things are noise. You're on this chart for one reason and one reason only, that is to make money. You get every other thing that doesn't contribute to that factor is noise and distraction. Get out from such argument and what is it called? From those argument and time wasters, just distractions. You understand? So now, as a day trader, there are basically few questions I want to ask myself. You get when I come to the chart. Number one is, where is price coming from? Where is price? This is the two most important questions I ask myself, and this will help me determine direction. You understand? I trade pure technicals. I don't use fundamentals. That is not to say technical analysts are the best, or fundamental analysts are better, or people trading the fusion of technical and fundamental analysis what is it called now? The geniuses in the market. It's not true. I told you, your one goal in this market is to make money. Anything that doesn't contribute to that is noise. Do fundamental analysts make money? Yes. Do technical traders, technical analysts, do they make money? Yes. You get. So why the noise? Why not focus on what works for you? Why are you so concerned about somebody else's journey? Of what benefit is it to you? If the person loses money, is it entering your pocket? If the person makes money, is he sharing any revenue or profit with you? Why not just focus on your journey? What's the essence of all the noise and all those this is better, that is better? Okay, even if you ascertain that one particular approach is better, what do you gain from it? Does it add to your PNL? It doesn't. So why not just shut up and focus on your journey? You understand? All those things are distraction. This is the stupid simple way to just make money from this market. Where is price coming from? Where is price going to? So let's pick one chart. For example, this is GBP card. So I come to GBP card now. Where is price coming from? Okay, I can see GBP card is doing something like this. Well, I'm on the daily. So what do? I zoom out. Okay, you see this. This is all you see. But when you zoom out, you see a broader time frame. You get, and there's what is called top to down analysis, meaning you start from a higher time frame down to a lower time frame. It's just like, as I keep saying, it's just like you are in a car driving with just your windscreen. You will definitely have an accident. Why? Because you don't have proper view of the road. You need your windscreen, you need your rear view mirror, so you can see who's coming behind you. You need your mirrors, your side mirrors, so you can see who's coming beside you by your sides. You need your windscreen, so you can see who is before you. That way you have a proper, a round view of everything happening while driving. You understand? But when you come here and you are just on one time frame, maybe daily, and some people, as a beginner, I remember I used to do something like, I'll just randomly open 15 minutes. I see this, I'll say, oh, market is selling, then I'll start selling. Then you notice the market starts buying. You don't even know why. Then you begin to feel like the market is against you, or somebody is monitoring your trades. If I trade, it buys. If if I sell it buys, if I buy it sells. It's not really true. You just don't know what you are doing. You need more knowledge. So top-down analysis will help is like having that mirrors to see what market is doing, and you need to zoom out when you're on higher time frame so you can understand properly what's happening. Again, look at this. If you see this now, someone say, okay, there's a break of structure here, market is going to continue. It's not true. Whatever you're seeing here is not true. You need the full view. Okay, so zoom out. So based on this, we can see that price has been buying on GBP cards since September 2022. You understand? It has been on a bullish move. So one thing I like to do is to shut out all this noise. How do I do that? I switch to line chart. So from line chart, I'm seeing interesting zones, areas I can mark out. So I do something like this. So with this, I already see where the price is coming from. I already know the position to take. So I want to buy this market. I don't want to sell it. Now, this is a good place to note that the fact you took a loss does not make you a bad trader. You understand? You will take losses, sometimes multiple losses. It gets sometimes sequentially, like you take another loss, you take one loss, you take another, it doesn't mean you are wrong. You understand? What matters is how much do you lose when you're wrong, how much do you make when you're right. Okay, losses are part of the game. You understand? It's just like you want to trade. I have a video on chasing perfection. You want to get, you can check it on, or I'll add it to this video. You want to enter at the best place possible and get out at the best place possible. It is not possible. It is not possible. Progress is messy. You understand? It is not possible. In trading, there's an approach I want you to get. There's an approach I want you to get. That is, what would I call it now? An area view approach. I don't know if I'm pronouncing it correctly. So let me show you what I mean by an area view approach. Bird's eye view, good. So this is what it looks like. Not to digress, but it gives you more perspective, more information, more data than what you are currently seeing. It's just like if I'm on the street, I'm seeing houses. Maybe I'm seeing one or two buildings around me, but if I use a drone to still view that same thing, the way I view the environment will change. It's not that the street changed or the environment changed. It was just how I look, or how I started viewing it. My lenses changed. So I'm saying all that to say this. You understand? Taking 1, 2, 3 loss is normal. What matters is at the end of the month, when you compare your losses and your wins, are you making money? That's all that matters. All that long explanation and English is just to explain this. That you should learn to look at your trading performance month to month or week to week, not per trade, or else you just keep giving yourself unnecessary depression. So now on daily, we already have a position. Remember, this is a stupid simple way to trade. We already have a direction, so we want to buy this market. So I'm going to go to 4 hour to look for a POI. So now I come to the 4 hour. I'm seeing the market is not really going anywhere yet. This is from 29th of October. It's currently the 25th of November. Now, another mistake most people make is that you behave as if someone is putting a gun to your head to place a trade. It's almost like you have an addiction that you must be in a trade. If you are not trading, or if you are not seeing a position running, your body starts to itch. You get something will get wrong with you, or you lose your mind. Now, looking at this, you have to wait. You have to wait. You have to wait. I don't know why this is so hard for us as traders to wait. Let me not generalize it. Let's say most traders can't wait. So you already know that this thing is buying. Like price has been buying for since 2022 on the daily time frame. So you come to the 4 hours, you are seeing this. There's nothing here to do. There's nothing here to do. What do I mean? It's not as if you can't take a position, and make money on, but you want to be right. You don't want guesswork. You understand? You do not want guesswork. There's nothing here for you. There's nothing here for you. So wait. What I want to see, since I want to buy. So this is the most recent high. Here is the most recent high, lower high that price has formed, because it's still selling at this point. So here's the most recent high. Before I take any position on this market, I want to see it break here. When it breaks here, I will enter from the retracement. Now market has a clear direction. You get, I can now enter from the retracement. Yeah. But there is still remember, this is trading. Remember, this is trading. There is still a possibility that market is not even ready to buy yet, and can actually do something like this, where it will continue going down and down and down. So what happens? I just have a position where I have a higher probability. That does not make it fact. You understand? So for here, what do? We wait. That's all. I'm done. Let's go to another assets. So this is GBP USD. What is GBP USD doing? Go to the daily time frame. For you, this can be the weekly or something. Now on the weekly time frame, on the daily time frame, look at this. I'm seeing that okay, market was creating series of high highs and higher lows, and as usual, how do you know? Short the noise. See, up until this point, I think this is up to how long? This was from January. This is whole of this year. Market was creating series of high highs and higher lows, and what happened? Remove the noise. See, there was a significant movement here. See, I want you to see something. All this move market is making, you see, it's never at any point broke below any significant low. It never at any point broke below significant low up until this point. So what am I saying? If you have something doing like this, if you have something doing like this, and suddenly you have something like this, that should tell you something significant just happened. So now we have this market structure shift here, and to further prove it what do we see? Price didn't break above this high again. Look at that. That is already a clear proof that this market is currently in a sell phase. So what are you looking for? You are looking for a position to enter this market and sell. That's all. Don't overcomplicate it. This is the stupid simple way to trade. Do not overcomplicate it. If it's not clear, get out of that place and wait. If it's clear, look for a position and enter. If it's not at your area of interest or your point of interest, you wait. You are not going to die. You understand? So now on the daily, we already know we want to sell based on this we've seen. This is more than enough. You don't have to start drawing, okay, when the fair value gap gets into the HIV at the TFF zone where the police is going to get. You don't need all that. Those things are noise. You understand? Those things are noise. So you have this. Now remember, we say when price is selling, the market creates what? The market creates series of lower highs and lower lows, lower highs and lower lows. So if in itself is it takes out a lower high, it's no longer valid. Now this is where a lot of traders lose money. You understand? You have something like this, you have lower highs and lower lows, then maybe price does something like this, price does something like this. Most traders will say, okay, it's no longer selling, it's now buying. Then they take a buy position from here. Maybe market tap into their position, gives them a little profit, only to see something like this, then get here and drop. Then they'll think somebody is working against them, or they'll blame it on market manipulation. It's not true. You are in a sell market as long as the swing highs and the swing lows are still valid. It has not been broken significantly. By significantly I mean not a week. You understand? That movement or that position is still very valid. This is what I mean. Okay, like in this buy phase, remove the noise. This is basically all market did. Market came here, retraced and continue. Now this happened on the 3rd of March, and this retracement was April. So that is more than a month and 4 days. Now when people see this, he's selling. Oh, market wants to change, it wants to change, then they sell, then they catch a little sell, they're happy, and it takes them out. I'm like, I thought it was selling. What happened? It's not manipulation. You get, as long as this place has not been taken out, as long as this low has not been taken out, you should not be looking for any sales in this market. You should not be looking for any sales in this market. Now, same with this place. We have here, take out the noise, this. So this is the swing high. This is where the swing high is. So let's put it here. So this is the swing high and the swing low. So as long as this lower high has not been taken, you should not be looking for buys in this market. It's that simple. It is that simple. You understand? So now we already ascertained that market is selling. You get, there's already break of structures here. Now another thing to note is that at every break of structure, market leaves a point of interest or an area of interest. Let me just slow down a bit. This is what I mean. So if you have something like this, higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, at each of this level where price broke structure above in a buy market, now here at each of this place, market leaves an area of interest to enter for the next leg of the movement. What do I mean? When market breaks structure, check around here to find how to enter this guy to continue the buy. Same with the sell. When market does something like this, at every of this place, market leaves an opportunity to enter the next leg of the sell. You understand? Stupid simple way. So now take out the noise. We have this. So we have this is where market created this lower high, then we have this break, then we have this break. So now basically all I'm explaining now is my next opportunity to enter this sell, that is to take a position that will do something like this and continue down, is on this place. So let's look for it. So we have something like this. For entries, I use fair value gaps. For entries, I use fair value gaps. So now I already have know where price is coming from. I have a high probability of where price is going to next. I've seen the break of structure. So what do? I drop to a lower time frame. I'm looking for a fair value gap around this area to enter this market for the sell, and I found it, but let me drop down to a lower time. It's around here. This is it, but I want to drop to a lower time frame so it's clearer. You don't need more than this. Daily 4 hours, 1 hour 15. You don't need it. You don't need more than this. So this is what I'm saying. If you didn't have the higher time frame perspective, you come here and you'll be confused. You don't know what to do. You see, you don't know what to do. But because of this now, because I have the higher time frame perspective, all these are noise. Okay, since I'm not seeing a very clear entry on 4 hours, I'm seeing the fair value gap clearly on daily. So this then becomes my entry. Either this then become my area of interest. I'm looking at this. If I'm entering from here, this is my stop loss. But above this is another fair value gap where price might likely get to. But most times it's always at the candle that broke structure. That's the one that's going to respect. Like, what do I mean? Look at this. Most times it's always on the candle that broke the structure. You get. But because it's on the daily, I have this too. Let me see if we have something similar. Yes, like in this case, see, we have one here, we have one here. This seem more significant than this, but this is not the one market used. This is what market used. You understand? So on this place, this now becomes my area of interest. Now that I have an area of interest does not mean I'm just going to jump into the market. An area of interest means this is where I'm likely looking for an opportunity to enter the market. That does not mean that I'm going to jump in. I'm not jumping in yet. You understand? I have an entry model, and this is my entry model. When price taps into here, comes to this area of interest, I then start looking for this. Let me just draw it out. I then start looking for this. In this case, it's a sell. Taps into my area of interest, drop. This is where I'm looking for. This is what I'm looking for. This is the model I'm looking for. Meaning, I then expect it to come into this place like it's buying, then drop. Then I then enter from here. So my entry then is now here, stop loss above on this high. Or if this is so small, it will be above this. So I have an entry model. So this is now my area of interest. So for now, we'll just wait. But we already have where we are likely going to enter this market. Let's go to NZD and see what's in NZD. So what has NZD been doing? As you can see, NZD has been selling. This is since 2021. You understand? So to be on the safe side, you should be looking for more sales on NZD than buys. You understand? You should be looking for more sell opportunities on NZD than buys. Take out the noise. For those using trend lines, you will now have something like this. I just wanted to touch, but I don't really like using trend line that much because there are so many. Some people will tell you okay it's 3 touch, some people will tell you it's 2. Someone else can come and draw this totally. There's no, everybody has their own approach to trend line, so there are so many variables to it. That's why I don't like using it, but it's just to show you the direction that this market has been selling. That's all. It just shows you the trend. That's all. So market is currently selling. What do you want to do? We want to sell. We are not looking to buy. Look at what I was telling you. At every break of structure, market leaves a point of interest to re-enter that market. See it. Broke structure here. What did you see here? Rejected from that place. Now on this place you see it. Take out the noise. What are you seeing? Lower highs, lower low, lower highs, lower low, lower highs, lower. Now this is what I was explaining. If you don't have like this perspective, like the line chart, you will see this and you see market has broken structure here. Market has, there's a change of character. The market is about to buy. It's not true. This break cannot be with a body. This has to be a week, because the fact that, let's check, but I'm telling you in advance, the fact that it did not buy means it didn't break with, it wasn't a significant break, it was just a week. You see, it was just a week, it was nothing significant. And where did it even reject from? Look, what do you see there? There's a fair value gap. Do you get it? Break of structure, another opportunity to enter the market. Are you seeing? Break of structure, another opportunity to enter the market. Break of structure, another opportunity to enter the market. Are you seeing? Oh, it's already 33 minutes. I'll continue in the next video. But if we are looking to sell this market, which we want to be doing, actually we want to be selling, let's go to the 4-hour time frame to see if there's anything for us. I think there's something for us. There is something for us. So now we have this here. This now becomes my area of interest. I want to see how price behaves at this zone, at this fair value gap. Remember I tell you fair value gap is my entry. You understand? So I want to see if price will do something like this, then continue selling. That's all. So I wait. I'm not jumping into the market. I wait. Some people will say, okay, since I expect it to go, why don't I just keep buying? That's why the rush. Thanks for spending some time with me. See you in the next video.